Welcome back, everyone. We started this week with what some people thought would lead to an economic collapse of the worldwide economy, with the Evergrande company not being able to pay some of its debts. So we'll go over kind of the story about how this thing has played out so far. The Federal Reserve had their meeting this week, and they talked about their timeline for when they thought they're going to start doing their asset purchasing tapering, and when they thought rate liftoff might begin. And Robinhood announced that they're going to be releasing cryptocurrency wallets, which will finally allow people to take their cryptocurrencies off of the app and store them onto other exchanges like Coinbase or BlockFi. Remember, if you enjoyed the video, please be sure to like and subscribe. It really helps me out. But without further ado, let's get right into the video. We've got a lot to talk about this week. So first, let's talk about Evergrande. If you haven't heard about what Evergrande does, they are primarily a property developer. They are the second largest property developer in China and one of the largest companies in the world. In fact, they're a part of the Global 500, which is a list of the 500 largest companies by revenue in the entire world. But the issue with Evergrande is their debt. They have a ton of debt. The total value of their debt is around $300 billion, and they can't pay it off now. Obviously, the people who lent them all this money want to get their payments for the debt that they gave them, but this week, Evergrande missed one of their bond payments. They had one payment on Monday that they were expected to miss, but they were able to get a deal with the people who they owed it to, and they were able to pay that off, and that one was okay. This Thursday, though, they had an even larger payment that was worth about $83.5 million for a bond that was due to foreign investors, and they did not pay this one at all. They have a 30-day grace period with this bond, so they still haven't technically defaulted, but if they can't pay this off soon, then there's going to be more bills that come up next month, and it's going to build up pretty quickly, and it's very likely that we'll see this company default. The Chinese government also seems to have no plans to bail them out, and are just going to let them fail. They've told their local governments to prepare for the collapse of this company, and to only intervene at the very last minute. So how does this affect someone like me who has no Chinese investments, let alone something with this company specifically? One of the big fears when this started to get closer and closer to the deadline for them paying their debts was something called contagion. There were fears that once Evergrande wasn't able to repay its debts, this would spread out across the global markets, causing liquidity crises like what happened in 2008. After people who definitely know way more than me about this type of thing had more time to digest what was happening, the fear started to ease up on what was happening. Only around $20 billion is due to foreign investors, so most likely, even if Evergrande defaults on the debt, the rest of the world should be able to absorb the loss fine. China, on the other hand, may not be able to handle it well. The entire real estate sector makes up about 30% of Chinese GDP. Evergrande also employs 200,000 people and creates the demand that led to the creation of an additional 3.8 million jobs. Their employees and customers are going to be really hurt in several different ways. First, it's very possible that Evergrande will go under, leaving their employees without a job. Evergrande also made their employees give the company loans if they wanted to get their bonuses at the end of the year. But now it's likely that they won't be getting their loan payments back, and they won't be getting those bonuses anyway. Second, all of their customers that put down payments on unfinished apartments may never see that money or apartment ever again. Evergrande owns more than 1,300 projects against 280 cities. They're trying to sell those off, but no one wants to buy unfinished apartments to continue construction, especially as property values are starting to fall like they have been throughout this entire year in China. The entire Chinese market has already been declining as they put more regulations on their largest companies. Alibaba is down 47% from its highs. JD.com is down 30% from its highs. NIO is down 43% from its highs. And if we look at an ETF like MCHI here, which tracks an index of Chinese companies, we can say that this is down 31%. The entire Chinese market is down at least 30% over just since February. And this Evergrande situation is just another thing that's pulling down on the markets there. But I have no interest in investing over here, even though On like a fundamental basis, if these were American companies, like Alibaba would be a great deal to invest in. It's definitely at a good price, but the governmental risk is something that I'm not sure I'm willing to take because I don't really understand why they're doing what they're doing. So it's just something I'm gonna just stay away from. But I really don't think that this situation here with Evergrande, at least right now, this could definitely change in the future. I don't think as of now it's going to affect me that much. It's definitely caused some volatility, but again, I want my portfolio to go down in value so I can get better deals on things that I want to be buying. Now moving on Wednesday we heard from Jerome Powell and got notes from the Fed's FOMC meeting. They were expected to not announce the start of a taper of their asset purchasing and keep rates where they are, and this is what they did. While Powell was taking questions about their meeting, he also gave insight on when they're going to start tapering the asset purchasing programs and when they are going to start raising rates. As long as the economy doesn't worsen over the next few months, it's highly likely that the Fed will start tapering in November, and they expect this to take around 8 months, which would put the end of the taper sometime in the middle of next year. Powell also said that rate liftoff won't start until after the taper is complete, but it's looking like we are going to have a rate increase next year. If we go here to the summary of their economic projections, and we look here at this table, we can look at the federal funds rate of what they expect it to be, and we can see that right now, this is where we are with the federal fund rate at an average of 0.1, and they expect it in 2022 to end the year at 0.3. So this would be a 0.25% increase from where we are now. And this would likely come right after the taper is over, so this could happen as soon as the summer of next year. They also increased their projections on where it would be afterwards. They say 2 rate increases in 2023, bringing us to 1.0. And then they see 3 rate increases in 2024, which would bring us to 1.8. And then afterwards, in the long run, they want to get to a 2.5% interest rate. So with all of that, for the next few months, things will continue to be operating as normal, with the Fed buying $120 billion in bonds and mortgage-backed securities. Going into the end of this year, and the first 2 or 3 quarters of next year will be really interesting to see as the Fed finally takes their foot off the accelerator and starts to reduce their help to the economy, with the asset purchasing program finally ending and rates finally getting away from zero. Hopefully the market can price all of this in without any huge disruptions that led to the taper tantrum of 2013. We don't want to see that again. Next, we have the news that Robinhood is finally announcing that crypto wallets are going to be rolling out to the users in the next few weeks and months. If you want to join Robinhood and get access to this feature, you can use the link that I have in the description, and when you put $100 in your account, you also get a free stock. Now with that pitch out of the way, personally, I don't really have a lot invested in cryptocurrency. I have a tiny amount of Bitcoin that I got from mining for about a month, and I'm just going to leave that in BlockFi for the foreseeable future to earn some interest. I also have about $60 worth of Ethereum that I have staked in Coinbase. I got all of the Ethereum from Coinbase Earn, so I have not put a single dollar of my own money into cryptocurrency, but I figured I'd get the free the free crypto that's out there and just hold on to it and see what happens. I don't really care what happens to the price, even if it goes to zero. It doesn't really matter to me, but I figured it'd be good to just have a little bit. I have enough where if it went to zero, I would not care really at all. But now back to Robinhood. I think this is a really great thing for Robinhood to finally be adding. Robinhood is one of the cheapest places to buy cryptocurrencies since they don't have any fees that most of the other exchanges have. Now, obviously, they do make money from their payment for order flow just through crypto. So it's obviously not going to be the best possible price, but it'll be a lot cheaper than through the other brokerages like Coinbase. With the wallets, people will finally be able to transfer their currencies out of Robinhood and store them wherever they'd like, putting it onto BlockFi where they can earn some interest on it, or putting it onto Coinbase and keep it with the rest of their crypto holdings. So overall, I think this is really good for those who want to buy and trade cryptocurrencies, but I will probably be making a big use of this feature, even though I am enrolled in the waitlist for it. Finally, as I mentioned way back at the beginning of this video, my portfolio has been going down in the last month. It's down about 1.9% in the last month, despite in the last week actually being up a pretty decent amount. Not all of my holdings have been down, but the ones that have been starting to go down are getting to some pretty interesting prices that I definitely want to take advantage of. AbbVie is still at a decent price after it fell with the Rinvoq news a few weeks ago. Aflac has been falling quite a bit in the last month. It's down about 8%, so I'll definitely be adding to this company. Companies like Store Capital, which are down about 5%, and Realty Income, which are down about 6%. So I'd definitely be looking to adding into at least Store Capital, maybe not Realty Income yet. I'd like it to come down just a little bit more. But I think Store Capital is at a good price right now. While I do want to be adding up to these positions, a lot of the companies that are like my biggest positions are the ones that are down the most. So I don't want to become too heavily invested in any of them. Like, I'd really like to just throw a ton of money into AbbVie, Johnson & Johnson, and Store Capital. But I don't want them to become such like too large a position in my portfolio, and they already are kind of large. Store Capital is about 6%, Johnson & Johnson 7%, and AbbVie is 6%. They're already higher than I'd like them to be, so I'll just like throw a little bit of money into each one and have other positions that I'm starting to build up more, like Vici and something else I'm going to be talking about a bit later. I still feel like I need more diversity in my portfolio because some of these holdings are definitely way too large. Like, as much as I love Apple, 7.5% is more than I want to have in one company. Same with Johnson & Johnson, JP Morgan. I love these companies a lot. I think they're going to do very well, but I don't want them to become too big in my portfolio in case something bad happens, like what we saw with AbbVie. So I'm going to be doing something that I probably should have done a long time ago, and I don't know why I haven't, but I'm going to be adding a new sector to this portfolio. If you look here, these are all the different sectors that I have, and then at the end, like growth and ETF stuff. And you'll notice that I'm missing 2 sectors. I don't have anything invested in material companies. I don't have anything in industrials. And I'm going to be adding some industrial companies. I'm still doing some research to figure out exactly how much I want to put into them and which companies I'm actually thinking about. But right now I've got 3 on my watch list that I think are, with 2 that I think are a good price and 1 that I think is a little overvalued, but if it comes down, I'll definitely be looking at buying into it after I finish my research. This is the Vanguard Industrial Etf, and we can see that industrials had a big run up over the last year, just like a lot of other things did, but it has been really flat since May. Right now, it's trading at the same level as it was back in April. And then some of the individual companies I'm looking at, one like Lockheed Martin, they are down about $50 from their high, and they're down about 7% for the year. Caterpillar, which had a huge run towards the beginning of the pandemic and into the end into June of this year, but it's really come down since then, and it's dropped from $240 to $196. And this is also trading at a price that I think is about at fair value. And finally, one that I would really like to make a big position in, at least I think I would, is Honeywell. But this one hasn't come down as much. It's been just pretty flat for the last several months, along with this is the same thing with the entire industrial ETF. So I haven't made a decision on if I'm going to be buying any of these really, but after I do some research, I'll pick one or 2 of them and start a position in that, and I'll make a video going into like a deep analysis about it. So hopefully I can get that done this week, and then that'll be what we talk about next week. We also have some pretty exciting news with some of the holdings that I have, with McDonald's announcing that they're going to be raising their dividend by 7% to $1.38 per share, and they're also resuming their share repurchasing program. JP Morgan officially announced their dividend increase to $1 per share. Microsoft is raising their dividend by 11% to 62 cents per share. And finally, Store Capital raised their dividend by about 7%. So with all those raises, my dividend income has increased to $1,038 per year, and I haven't put anything into my portfolio since the last update, except for the dividends that I've been receiving. And at this rate, it won't be long until I'm averaging $100 a month in dividends, which is going to be a really cool milestone to hit. Well, that's it. I want to thank everyone for watching. If you enjoyed, please be sure to like and subscribe because it really helps me out. You can use any of the links down in the description to join Robinhood or M1 Finance and get some free stocks or money. I'll see you all next week. Bye.